Welcome to the summer installment of Insights on Investments. We are all familiar with the phrase, buy low, sell high. Indeed, it is perhaps the most basic principle of investing and serves as a bit of common sense that guides our financial decision making. Yet even for the most experienced investors, the concept can remain elusive. Many investors give in to the pressure to sell when an asset is falling and miss out on future appreciation. Other times, when values are increasing, euphoria sets in and investors crowd into an already well-performing asset that, in all probability, has little room to grow. Of course, high and low are relative terms that are ultimately defined by the market. With asset prices at their current levels and the SBCERA portfolio at an all-time high, it is admittedly difficult to identify buying opportunities. Yet, we also anticipate future growth. Knowing not what the future holds, we instead stick to our plan and give time for outcomes to unfold. Last year, when emerging market equities were under duress, we chose to hold on to those assets rather than cut our losses. That exercise in patience proved to be successful for the fund, as emerging market equities have rallied and are one of this year's top-performing allocations within our portfolio. In some ways, recent events could be seen as a relief rally where the bad news priced into the market didn't materialize, thus leading to a bidding up of asset prices. Recall that in January 2016, oil bottomed at just below $40 per barrel. Following this, we witnessed an over 20% recovery in oil prices, and emerging market equity companies responded vigorously, gaining over 35% from the low in January 2016. At the time of filming this edition of Insights on Investments, we have seen a pullback in oil prices, now trading around $45. And while we have seen signs of a corresponding slowdown in emerging market equity, the allocation remains a positive contributor to the SBCERA portfolio. More recently, emerging markets have been a popular topic of financial news, headlines as the market potentially undergoes a rotation away from U.S. equities. Whether this is a sign of euphoria or good timing is uncertain, so instead, we strive for common sense and a patient approach. Since, like all other investors, we are unable to perfectly time the market, we remain cautiously optimistic on emerging market equities and believe that although it is a relatively small segment of our portfolio, it can help carry the fund to ever new highs in the next fiscal year.